What's up, everyone? In this video, we're going to be doing the recap of the stat modeling strategy. We're going to be covering all the plays from this week and basically what's happening in the market right now. We can see the S&P 500 is at all-time highs. We are seeing certain stocks like Nvidia and Roblox explode up, while we are seeing other stocks like DraftKings and JMIA get destroyed. There are a couple reasons for this. One of the main ones, in my opinion, is that investors are kind of pricing in rising rates, which would basically hurt the current valuations of stocks that are set to grow a lot in the future. So that's one main thing. On top of that, of course, with the stock market, whether it's an IPO like Rivian exploding up or a stock like DraftKings tanking down, hype is contagious both to the upside and the downside. So it's like that momentum to the upside really helps Rivian explode higher than, or really helped Rivian explode higher than it should have. And at the same time, DraftKings has a lot of negative momentum right now, which is making the sell-off just, I guess you can say, accelerate. With that being said, DraftKings really doesn't have any bad news. They missed their earnings report a couple weeks ago, which is definitely a catalyst, but to see a continued sell-off like this is pretty unreasonable in my opinion. And even with this sell-off, they continue to come out with good news. They are the exclusive partner with the FaZe Clan. They just had that new deal with the FaZe Clan, which is pretty big. Another thing, they just had great news with the Boston Bruins, partnering up with them. Their director bought nearly $2 million worth of DraftKings shares 2 days ago, so that's big. So all in all, they're still on offense. They're growing a lot. They have some great numbers. They have good catalysts. They just got their New York sports betting license, and they have good news overall. The only real negative thing is, one, the earnings report, which was decent depending on who you ask, and then two, in my opinion, the anticipation of rising rates, which is hurting not just DraftKings but all stocks that are growth stocks. So that's that. With that being said, we are seeing other stocks like Nvidia and Apple and other stocks that are already more established rise because I guess you can say rising rates wouldn't hurt them as bad. So, it's just part of the market. DraftKings goes on, and not even just DraftKings, but other growth stocks go on crazy uptrends and crazy downtrends. We could see sometimes DraftKings goes from, you could say, $41 up to $64 in the span of a couple weeks or a couple months. And at the same time, there will be some hard downtrends to come along with that. So that's that, and let's get right into the swing plays. So it was a decent week overall. Nothing amazing, nothing horrible. Tom had a pretty good play with MU on Thursday and Friday. He also locked in some pretty good profits with Boeing, or at least half of them, we should say. We do have a lot of plays open, like GM's open, Boeing, HYG. There's a lot of open plays, so those are still in the works, and we'll definitely cover them when we close that play. But with everything being said, in terms of closed plays, it was a decent week. Definitely not amazing. Having certain stocks fall down like JMIA and DraftKings definitely hurts in the short term, but most of our swing plays have a ton of time right now. We can see if we go to this Disney play that we opened, this expires in January of 2023. So it has a ton of time. Not really worried too much about it. With Disney, they fell on their earnings report, which was actually pretty disappointing. With that being said, we did roll the play, which I'm actually very, very happy with how we rolled it. Basically, when you roll plays, generally speaking, especially when you are long an option, it costs you more money to roll into an option with more time. So, for example, let's say you had the Disney December 17th, 170 strike calls, and those costs around $62 right now. If you wanted to roll out of that play for an option with more time, let's say to January 21st of 2022, it will cost you around $186 for the new option. So all in all, basically what happens when you're rolling, most of the time it costs you more money, but with our Disney roll, it was very strategic. Number one, in the way that it did not cost more money. It was actually beneficial how we rolled it. And then two, also it is a spread now, so that'll increase the probability of profit. So that's good. So I'm definitely happy with how we rolled that. The theta plays have been going pretty good as always. It's a nice slow and steady way to grow your account. That is in the premium selling channel. And the bot had a decent week. It definitely wasn't great, but it definitely wasn't like horrible either. Two of the plays were duds, so the Monday play and the Friday play were definitely duds. You could say Tuesday and Wednesday were decent. They popped for 18% and then 21%. And then the play on Thursday was definitely the play of the week. It was with Apple. It was like 160% winner, which was awesome to see. We could see the bot got in those Apple calls basically right before the major move happened. The bot called out the calls right when the stock was at like $154 and like 70 cents or so, and by the end of the day the stock just exploded. So that was awesome to see. Long story short, certain stocks are exploding right now, certain stocks are getting smacked, but all in all, the stocks that are down right now, we do have a lot of time, and worst come to worst, we can always roll the play or hedge it if necessary. So thank you guys so much for watching today's video, and have an awesome weekend.